Hi everybody, I'm Stan Zaslavsky from Eagle Vision, here again with Ben Payne, and we're completing our series on hidden traps for property developers. And look, last time we talked about some of the stamp duty related issues. This time it's all about tax impacts for joint ventures. So Ben, what do the property developers need to look out for?
Yeah, so in the last two presentations we focused more on changes within a company and a unit trust. And the changes in those underlying ownerships of those particular structures, being it changes in the shareholdings and also the changes in the unit holdings. Now we're going to be addressing what happens if we've got changes in the underlying ownership of a joint venture. Right. Now, the important thing to understand with a joint venture is that most joint ventures for tax purposes are actually partnerships. Right. And the reason that they're partnerships is that there's a share of profit as opposed to there being a share of another interest or having some kind of non-common split of profits or split of the end development stock that's been produced. So as a result, effectively what it means is that whenever we have a change in a tax law partnership in the ownership, we've effectively got a brand new partnership. Right. Which creates all kinds of tax implications, from stamp duties to income tax to GST issues. Yep. So if we look at stamp duties, effectively any change in an ownership effectively means we've got a change of a portion of that property either to a new owner or a portion of that property going to the existing partners that are already within that partnership. Yep. Yep. So as a result, that portion that's been transferred will have stamp duty on it at the market value rate at that point in time. Right, okay. So that can be a serious impact on a developer if he hasn't got his ownership structures right in the first place and he's bringing in different partners throughout the course of a development. Right. Outside of stamp duty, as I said before, there are GST and income tax related issues, and the GST issues that we're dealing with are again associated with that portion that's been transferred from or to the other partners. Yeah, gotcha. And the only way that we can actually address any issues in regards to those stamp duties is, one, it's how we deal with it from an income tax purpose, that particular transaction. If we're dealing with it as a trading stock and make a trading stock election, we may choose to actually transfer it at cost rather than market value, and that'll lessen the GST and the income tax impact. Or the other thing within joint venture agreements we don't commonly see is a continuity of ownership clause. Right. And by having a continuity of ownership clause, it effectively means that that partnership can continue to trade and not be seen to be a new partnership. Yep. However, it doesn't get us around the stamp duties. It only gets us around GST and income tax.
Look, Ben, thanks so much for the insight. Obviously, for any specific information, get in touch with Ben directly. Thank you again for watching and look forward to seeing you again next time.